This is the Accounting Influencers Podcast. It's usually me, Rob Brown, your host, delivering what we feel is relevant to you in the accounting world to help you be more influential and relevant. But occasionally I bring on magnificent guests that know a lot more than I do. And we've got Gale Crosley on today. We're going to meet her in a minute. Gale Crosley, I want to ask you, what is the biggest threat to accountants and the accounting profession right now?
Well, I'll boil it down to two. One is just general, and that's not just CPAs and accountants, but our country generally, and that's the unpredictability that we're facing. And with things moving quickly and unpredictably, that impacts CPAs and accountants for sure, because they're right in the middle of things like tax, right? And tax laws, and what are we going to do with tax? But I think the other thing, Rob, is, and unique to our profession right now, is the biggest threat is denial. Denial that we are in the middle of a tsunami, that this is just an incremental little rainstorm and this too shall pass. The changes that are happening in our profession are so significant, more than we've ever had in over 120 years or however long we've been a profession. And if we look around us and just see it happening and not adjust or find our footing and find our place in the new order of things, we really risk the potential of being irrelevant. So I think that's the biggest threat.
Is a world without accountants possible, Gale, with all the technology you see right now and all the different competition coming at accountants for their business?
No, not at all. In fact, quite the reverse. We have the opportunity to remain supremely relevant and up our game with trusted advisorship and expand our game into non-financial statement matters, and in the tax world, matters that are even beyond what we traditionally think is tax compliance. And then consulting services that are right here ready for us to do if we can get our act together quickly enough and grab the market before others do.
Well, you've got vast experience in the accounting world, so we're going to do a sweep on this episode of some of the key things that are challenging accountants to step up. And let's start with growth. You've assisted many firms over the years, Gale, in achieving organic growth, not just buying it in and buying a book of business. What common challenges do these firms face, and how do you help overcome them?
I often say, Rob, that I'm doing missionary work because I can't. Because I came from a world, which is corporate America, where the level of sophistication with growth is very high. Like on a scale of 10, it's a 10, because I came from the tech world in a couple of decades in the tech world, and it was fast moving and very sophisticated. We never needed to have that level of sophistication with growth in our profession. And so we've done fine with banker breakfast, lawyer lunch, very tactical approaches, and being generalist. And the biggest change that faces me when I come into firms is a change in the mindset itself. And that has to do with the need for the change. If I can't get them focused on the need for the change, then they're not going to be receptive to changing their mind in that very big way that needs to be changed in order to make the change. And so a lot of work is done up front to describe what the differences are between a very low level of rigor and sophistication up to the highest level, so that one can compete at a very high level with one's competitors and be relevant in the future.
Who's responsible for growth in a CPA firm?
Well, traditionally, each partner is responsible for their own book of business and the growth of it. And then at the end of the year, all those books are rolled up, and that's what the growth of the firm is. And especially in smaller firms, that still is the case. And the big change is to transform from individual contribution book of business partners to a firm that can scale with leader-driven growth, that's strategic growth. And so that's who should be in charge of growth. But the change, as you can imagine, is very significant.
Yes. You've mentioned change a lot. And when you go into firms and you're pushing them for growth, how coachable are the accountants of today?
Well, it's the same as it was when I opened up my doors 23 years ago, and that is the bell curve.
Right. Sure.
And so I identify the people that are on the leading edge on the bell curve, and then identify who will never, ever, buy into it. And then where is the grand majority in the middle, and where do people track? And that's the way that I approach how I get it done, so to speak.
Let's get a takeaway for this before we move on to technology, Gale. What advice would you give to individuals within firms at whatever level they are at to handle growth better, to have more of an understanding of what's required?
The skills that are needed have to do with the people-centric skills, and especially when technology is going to take away all the stuff that tech can do. We're left with the things that only people can do. So these are skills that aren't really taught in college in particular, or they may be optional subjects, but things like interpersonal communications, handling the politics and power of larger organizations, public speaking, persuasion skills. I wish that I had been on the debate team when I was in high school and or college. Those would have been really good skills to have acquired.
I see technology. It seems to be the driving agenda at the moment in accounting firms, people and technology. With so many rapid technological advancements, how should accounting firms be adapting to stay competitive, stay growing, stay relevant?
The one thing that they need to do is grab onto innovation as a subject and grab onto it as a function within the firm that needs to have its own carved out and very purposeful implementation. And we call it product management over in the tech world. And I still work with fintechs and accounting techs as part of my client base. And they have a very well thought out and very well implemented product management function, AKA innovation. And most firms, especially when I started my practice, didn't have any innovation, anything at all. And it would just be incremental. Let's, go develop something, write an engagement letter, while we're developing it and go do it. And it was kind of a one and done. So there was no process at all. And in many firms, that's how they still operate, but not in the most advanced firms, Rob, or the firms that are on the high end of the growth, larger firms. They are adopting chief innovation officers. They're adopting processes around innovation. And what that does for the firm is it enables it to prioritize where they're going to invest based upon business use cases that are going to accomplish the objectives of the firm. And for example, they're going to segment their technology innovation into client-facing technology that drives revenue, and client-facing that drives profitability, not necessarily revenue. And then the other side of it is internal infrastructure, time and billing systems, practice management systems. And when they have a framework, then they can be thinking about, are we doing this to drive revenue? Are we doing this to drive profitability? Are we doing this to be more efficient internally and make better business decisions?
What's a quick takeaway that our listeners, viewers can derive from what you've said with the technological impact? They're on the front lines, they're in the trenches, Gale. What one thing could they take away and apply quite quickly?
They need to be on a continuous shopping trip.
I like that. How do you mean?
They need to be just like, some people like to go to the mall and shop every weekend.
Yeah, some people do.
They need to be continuously shopping for what kind of technologies they're going to need, and they need to be continuously shopping in their industry or service line that they're responsible for the business use cases that are most applicable and that are in the market and that are real and not just a bunch of fluff. And so when they're continuously shopping for the business cases, at the same time they're continuously shopping for solutions to those business problems, then they will have that mindset of, I'm always incrementally improving. And it's not like I do a project and we implement fill in the blank and then we're done and then we can go and go. And then in 3 years, we'll look again. No, that's not the nature of what's going on with us
and
right now.
You mentioned innovation. That's just a curiosity mindset, isn't it? Is that coachable? Can they learn to be more curious?
Absolutely. Yes. We can build it into the job description and the key performance metrics and how they're evaluated at year end. How many of this, what business use cases are the most prominent in construction? If you're you got a construction segment or you're part of that segment, or what are the business use cases for tax preparation, and and which ones are we going to choose, and how are we going to build a financial model around, the business model around it. So those things can be built right into someone's performance plan.
Let's hit private equity, Gale. Just like technology, we can't escape the influence that PE investment in accounting firms is bringing us. What implications does this have for accounting generally? And how do you advise firms navigate the PE question?
So, number one, it's very controversial. As you know, there are proponents, and then there are detractors, and then there are people in the middle. I say, when people ask me about what do I think about PE, I say that this is a yowie.
A yowie.
Or a meowie. My opinion, while interesting, is irrelevant.
Right.
because it's happening, and so therefore it is what it is. Therefore, now what do we do about it? I use this when I talk to my firms, and I use a picture of a skyline that has a Space Needle looking thing in it. And I ask them what city this is. And they always say Seattle, but it's not. It's Atlanta. And when I moved to Atlanta, that was the tallest building. And then I flip up today in Atlanta, and it's like halfway higher than all the tallest buildings. And that's because the Olympics came in here in 1996 and flooded us with all kinds of money. And so the same thing is happening with PE in the CPA profession. They're flooding us with gobs of money, and therefore the neighborhood is changing, ladies and gentlemen. Look around you. There's going to be big, tall buildings, and they're going to be very different looking than whatever it is you're living in today. Therefore, the important thing about PE is that they're not only bringing all this money that changes the neighborhood, but they're bringing two other really important things. One is an incredibly fast pace. So we've been living life in the right-hand lane for 100 some years. At least we're not on the shoulder of the road, but we're in the right-hand lane. And here they come tearing down the left-hand lane. I mean, and it's like, if you don't you better either get in the left-hand lane and get going, or you're just kind of going to be left in the dust. So pace, that's the other thing they bring. And then the third thing they bring is all these incredible best practices from the corporate world that I was talking about, that I came from and have been doing this work for many years over here. And that means that there are going to be things in firms that are growth related for sure, and technology related for sure, and labor deployment related for sure, that are having us change our ways, so to speak.
For our UK audience, we drive on the left-hand side of the road, so the right-hand lane is actually the fast lane. So we'll translate that, of course, but we get the analogy. And in terms of private equity and individuals in our audience scale, it seems like a big juggernaut that they just can't get out of the way of. But what advice would you give individuals to be more influential and relevant and aware of what's going on and apply it to their roles?
I think that the people at the top of the firms, Rob, are the ones who are most impacted these days, because they're the ones making decisions about, are we going to go PE or not? But what's going to happen, and it's already happening, but it's going to happen in a big way over the next 3 to 5 years, is we're going to see the manifestations of it in the market. And so everybody will be, from the top to the bottom of the firms, be seeing it in the market, regardless of the decisions that we made internally in our firm. And a lot of the rank and file will not have a lot of influence over what those decisions are. But when we go out into the market and we find out that there's a client that we had that, for 30 years, and then somebody came in and bid the job at half of the price that we did, and it's going to also be a better or more effective outcome, that's when we're going to really see it. So we've got to keep our eyes and ears open at all levels in the firm and report back in as that is happening, because that's going to inform the strategy of what industries we're going to be in and what services we're going to be providing.
That's very good. And speaking of industries and businesses that we're in, let's talk about client selection. You speak very candidly on this. they say a firm is defined by its clients, but not all firms have the right client set. So you speak boldly of firms letting go of some clients and retaining some others. Just speak into that about what criteria firms should use to identify the good and the bad clients.
Got it. So I'm going to start at the strategic level, Rob, and that is that these clients that we have today, when we acquired them, they were good clients. It's just that the market moved on us. Like, we didn't make mistakes in the past. And the reason why they were good clients is it fit our client profile, and that is we were generalists. So we hung out the shingle and we said, come all comers. And then we decided how much we could take from the behavior of a bad client and how much we could take from the lack of profitability of a quote unquote
what
bad
are we willing
client.
to put up with?
The client could be, and both in behavior or in profitability. And so it wasn't a bad client then, because we were okay with bad behavior if every client was a client that we hung on to because we were driving revenue and we had a small market and there weren't that many other fish in the pond, right? And or it was a strategic decision. So I hear this a lot in not-for-profit. It's not a profitable client, but is that a bad client? Not necessarily, because strategically it was valuable. We met people on boards and that was important to us, and that helped us in the community and all. So when you had a limited pond here, and that is a limited geography that didn't have that many fish in it, well, then we would put up with bad behavior or we would put up with lack of profitability. But that's them, and now's now. And now we have unlimited geographic constraints, and we have the ability and we have fish jumping in the boat. All right. So we don't have to worry anymore about, we don't have enough clients that are of the quote unquote, the good sort. Now, the biggest filter that I use with clients is industry.
Okay.
Because before we can decide to kick some clients out of the nest, we have to figure out which industries we're going to be in. And I give an example where in one of my clients, we had some heavy highway contractors as clients, and on paper they would look very bad in terms of either they treated us poorly or they were not profitable. However, they were very strategically significant because we were focused on heavy highway as one of our main industries, and specialization right now is absolutely critical. Therefore, we were going to do something that would ease our pain around the behavior or ease our pain around the profitability to make it okay because of other reasons why we kept them. And so I always say that species trumps attributes, like always.
Love that. It's a
species trumps attributes. Yeah.
Great.
So don't go in there and take a machete to them because they treat you badly or they're not profitable first. You're going to end up with the wrong client set.
That's a great way of putting it. And for individuals in the firm, Gale, particularly those that don't really feel they have much of a say in defining niches and industries and specializations, how can they develop more power in that regard?
There is a principle that over here in the U.S., the Boston Consulting Group found many years ago. They discovered it, and that is the whole product life cycle. And you can take out the word product and put in market life cycle. And what that means is that when you are in the later stages of a life cycle, that specialization is critical, because if you don't get it, you're going to have thin margins because of competition.
Very good.
Therefore, you can flash in front of somebody or get it in a book the product life cycle and say, "Excuse me, but we're at cash cow and or fat cat, and it's a strategic imperative to be specialized." Therefore, if nobody is listening to me, at least listen to the Boston Consulting Group about this, and we need to get specialization in here. And as a result, we need to be changing our mindset from being generalists to specialists. And then from there, go down the road of, okay, now what specialization is it going to be? What industry is it going to be? What service line is it going to be? And where are the intersections going to be between different industries and different service lines?
That's great. Let's talk leadership. Gale, it all stems from leadership. That's one of your mantras. How can firms cultivate good leaders that can drive growth and lead people amidst the disruptive times that we're in?
My number one leadership recommendation is leadership training. And it's really interesting that leadership up until recently wasn't even a thing like that we ever talked about, because we didn't really need, quote unquote, the functional discipline of leadership. We had a bunch of partners and they ran the firm. And having come from terrific organizations like IBM, Arthur Andersen, I can tell you that when I went with IBM, we got leadership training. I mean, they threw us into, they promoted me into a manager role, my first one, and then off I went to leadership training. And they did a 360 on us, and my results were not very pretty, and it was really depressing. But it was very important that we learned it and not just OJT. Right? Because we all bring, Rob, our baggage from our years of childhood and adulthood. We bring all that baggage, and some of these are really good leadership traits, and then some of these are incredibly poor leadership traits. And we wouldn't ever know that because nobody said you need to be a leader, and nobody told us, well, leaders don't do fill in the blank. Right? This is just not what a leader does. You may have learned that that's an okay thing, but it's not an okay thing. So the training, I can't tell you how important training is, because one of the things it does is it brings out the leadership capabilities of people, and it also confirms to other people that they don't want to be a leader. So don't make me a leader because I don't want to be one. And at IBM, we could be they were very purposeful about this. And it was okay to say, I'm not a leader, but I'm going to take my professional skills and really be the best at it. I'm the best consulting engineer for the mainframe or whatever it was at the time that we were selling. And that was a respectable path, which was just as respectable as being a leader. And we don't have that yet in our firms. We don't have that crystal clear vision of path one or path two, and that we're talking about it and that we're making choices about it. We just willy-nilly, stumble along the way and trial and error and all that. And the more efficient way is to call it what it is, which is we're all designed differently to be and self-actualize in different ways.
I'm so glad you put that it's okay not to want to be a leader. When people look at management and levels higher up, there's a lot going on that they don't want to be a part of, but they can still be brilliant at their job and contributing to the firm. For individuals to take away from that point on leadership, Gale, I'm guessing you're saying that if you want to be a leader, then reach out and get leadership training and coaching at the most that you can. And if you don't want to be, then say so and look out for other ways to contribute to the firm. Would you add anything to that? Does that sound about right?
True. That does. And I will tell you a story that just happened recently. I have an acquaintance who is in an RIA, an registered investment advisor, wealth manager firms. They look very similar to CPA firms, and some of our firms even have those practices, in them or bolted onto the side. And she called me and said, "I'm really at a crossroads. I don't really know what to do. I've been an advisor for many years, a financial advisor, and now I have 4 people reporting to me, and I'm in a new company, and I'm kind of lost." And I said to her, "Kathy, do you realize that they have anointed you as a leader?" And she said, "What are you talking about? They've now put you in a leadership position, and you never led before. And now you have these 4 people. So this is a thing." And she's like, "Oh, okay. Now what?" I said, "Well, get yourself some leadership books and then get yourself into leadership training, because this is a whole thing that is a functional area that you now have to add to your repertoire and decide whether you like this leadership thing and are good at it, or whether you want to be the best financial advisor, that you can be." So that was the conversation. And that's what I'm talking about. If you've never seen it before, it's like, oh, I didn't know that this was what it was.
Gale, this is great. But let's finish off by asking you to look ahead. And for our core counting audience here, what's going to be the most significant change that they need to be aware of and take some action on and maybe get ahead of in the next few years?
The demise of the billable hour.
Go on.
This is so significant and just kind of is getting lost in the weeds. 80+% of our revenues are from billable hour invoicing. And the billable hour, as soon as you put technology to the task evaporates. And it's evaporating maybe incrementally, but it's evaporating to the point where there won't be any billable hours left, because it'll take, something that took you 5 hours will take 3 nanoseconds with technology. And it's amazing that it's getting lost in the clutter here and all the other things that are going on. But if I were a managing partner, I would say that the billable hour would be the number one thing that I would be talking about right now, and getting our arms around what % of our revenue it is, and how quickly it's all going to go away, and how are we going to transform our revenue streams to a different business model. Because we're at the strategic growth level now, implementing technology, offshoring people, private equity and all this, private equity. But that thing is the thing that's really going to hit us pretty hard, and we've got to be absolutely all over it right now.
And you mentioned the managing partner top down getting a handle on that, but for the employees in the rank and file and the other partners, they can be shouting that message out and getting ahead of it and showing the business case to move on from the billable hour. That can make them more relevant and influential in their roles, can't it?
Absolutely. And remember this shopping trip that I mentioned before? Well, if I were in the tax department on a shopping trip, I would be on a shopping trip for all these vendors that are getting all the hours out of tax prep and all these hours out of tax research. And I would be talking to them and finding out what their projections are. How quickly are they going to be able to get all this hourly work out of the tax area? And it goes true for audit and all the other areas also, but tax is the one that is right now the most the one that is the most visible, the one where I'm seeing the most progress, and the one that has greatest clarity around what the outcomes are going to be in terms of.
Well, you're at GaleCrosley.com, some amazing things on there and fantastic things you do for firms. Just leave us with some words of encouragement, Gale, about, despite everything that you've been saying, why is this a great time to be an accountant?
Oh, because we have a tremendous brand, a tremendous brand of trusted advisor. And I don't know another profession that has it like we do. And therefore, we can leverage off that if we understand that and we really grab onto it and say, now, what can we do with that? We could be counting how many fish are left in the North Sea. I mean, seriously, and opining and attesting to that. And we ought to be. We ought to be attesting and opining to all kinds of things other than just the narrow financial statement audit. And in the financial area with tax and the whole managing of companies from a financial perspective, and then advisory work. I mean, and all the other piece parts of companies. I mean, we are sitting here with a tremendous franchise. I'm pretty excited about it, actually.
Gale Crosley, you're such a great ambassador for accounting. Thanks so much for joining us today. That's been great.
Thank you. Thanks, Rob. Take care.